Good morning, everybody. I'm Ed Parcaut here with Mike Kelly, Real Estate Jerky Daily. How was you said Rotary was good today?
Oh, it was fine.
Yeah.
It was fine. It was a little political discussion. So
So
very
that pissed off some
bipartisan.
people.
No,
Okay.
very bipartisan. Adams News picked on one side, one party, but he says next week I'll pick on the other side.
He's a closet. He's a Democrat.
No, he's not a closeted Democrat.
Yeah,
he is a Democrat.
Yeah, he's a closet lefty, not just a Democrat. It's like, okay, well, you're just ruining your industry.
Oh gosh.
Yeah, and I mean, I'm not trying to be negative, but the positive thing today is the 10 years down at 4.087.
Wow.
And the bond is the rates are rallying. They're better by 20 basis points. So we're almost back to what we lost this week.
Cool. Very good.
And do you know why?
Because Mom Donnie won?
No, not yet. That's not happening yet. He's elected, but he's not in.
I know he's
January.
not in office yet.
Yeah, so
he's already asking people for money.
Of course he is.
Because everything's going to be free.
Of course it is. Yeah, free by buying it from other people.
Yeah, socialism is great until you run out of somebody else's money.
That's what Margaret Thatcher said.
Yes, she was pretty smart.
Yeah.
Anyway.
Yeah, okay. So
why?
So why? I'm going to get there. Right now, I'm going to get right there. So we're going to look at labor and inflation. Well, challenger job cuts. That's the report that comes out, looks at the way that they look at those jobs. I can't remember who they are. That's one of those days.
Oh.
Anyway, they came out and they said there was 153,000 cuts in October. It's the highest cuts for their report that they've seen since 2009.
Wow.
Hiring plans are down 35% year over year. Seasonal hiring is at its lowest level since 2012.
Mm-hmm.
So that is what came out, and that's what changed in the market, because everybody thought we were going to, it's going to go the way of the ADP employment that came in much better this week.
Right.
It was still showing down, but it was just much better to where we lost a lot in the last couple of days, and now we got all that back. So the seesawing, the biggest problem is we're not going to have the BLS report, the other job reports, because the government is still shut down. And unfortunately, we don't know for how much longer, because we're a record. They're in the Guinness Book of World Record now.
Yep. And I understand that Schumer and Jeffries, idiot one, idiot two, sent a letter to the Republican Party and Trump and said, we would like a meeting with you right now, about 27 minutes after the election was over. Gee, what do you think their plan was? Make people hurt and think the Democrats are the only ones that are going to be able to fix this. So they want to go back and talk in and maybe pass the clean CR and then have a discussion. Be interesting.
Yeah, well, no, they came back and asked for the world is what they did.
Yeah.
And they were like, go pound sand.
Yep.
But by the way, the Challenger job report is a monthly report published by Challenger Gray and Christmas. Really? And Christmas? I would like that last name. And it's about outplacement and business coaching for their firm. Like, that's what they do. It tracks the measure of number of job cuts, layoff in U.S. based companies, what are planned layoffs, not actual unemployment claims. It's a leading indicator. That's why it's important. So I wanted to get that information.
So that helped rally the bond market a little bit.
Well, because they're like, okay, well, doom and gloom.
Like we're happy.
Yes, everybody's going to lose a job, and they can't really afford to buy anything, and because they won't have a job.
Cool.
Yeah. They're saying, unemployment watch, like Chicago Fed says unemployment has unchanged at 4.36 in October. But wait, I mean, we're in November. Wait until December, and they show what November number is going to be. I guarantee it's going to be much higher. Austin Goolsbee, he is part of the Fed. He said market is stable, but the data is telling a different story. Hiring is down and layoffs are up. Yeah, so he also says watching core services, but CPI, PCE data will show 3.4 to 3.8 inflation, lower than his 4. He's saying he's seeing higher inflation than what a lot of people are saying. So here's the things: everybody's got their own opinion, just like everybody has their own, what, and it usually stinks. Yeah.
I wash mine with rose flowers.
Have a duvet or whatever those things called.
A
toilet.
douche.
Yeah.
The duvet.
Yeah,
no,
not duvet, not on the bed.
That's a cover.
Yeah.
Don't drag your butt on the duvet. A bidet.
Yes. All right. What else do we have? They're looking at. So I talk about Barry Habib. He's been in the industry forever,
forever,
and he created this it's like the MBS highway he has now. It tells us about the bonds and what's going on with a lock, whatever. He created one a long time ago, finally, and then he sold it in 2006 for a lot of money. And then guess what happened? Market fell. And he was like, "Oh, I'm so happy I'm out of it."
Yeah, no kidding.
And then he did the he did a thing on Broadway in that area, one of those, what are they called? The play. He did a play. I can't
Barry
remember.
Habib did a play.
Yeah, he like produced the play,
Mm-hmm.
and it was and they made a movie out of it. And so then he came back in the industry, started again. So he's really looked highly in our industry, is what I'm getting at.
Okay.
So the guy that's in charge of Fannie Mae, Freddie Mac, Bill Pulte, has tapped him to explore LLPA reform. LLPA is loan level price adjustments. Like I have, it's like risk-based pricing. I have a condo, it's more expensive than if I have a single family home.
Right.
If I do a manufactured home, it's a more costly because of that on that. So they're going to look at areas like investment property, second homes, and cash out refinance. I really want them to look at second homes, because second homes, you used to be able to do a 10% down on a second home.
Right.
And it was only an eighth worse in the rate than what a primary was.
Not any longer, right?
No, it's much worse than that. And you have to do 20% down, or it's just, or 25 to get the better thing.
Yeah.
And that's all because of the pandemic. Well, it's time to go back. And the other thing is, during the Biden administration, they put it on people who had better FICO scores to pay for people who had worse FICO scores.
I know, that was the dumbest damn thing.
And it's still there. I don't care what they say. It's still there.
No, it's still there.
Yeah. So they're going to look at all that, and everybody wants them to look at that. So one place wants them to remove fees on condos and manufactured homes. They want it to be the same as a single family.
Yeah.
The Mortgage Banker Association favors changing the LLPAs for rate and term refinance to reward borrowers with good payment histories. Somebody else wants them to, they support risk-based pricing, but again, it goes back to, they don't want affluent borrowers to pay for underserved communities like Biden administration does. The whole that, and I'm not knocking on the Biden administration, it's the whole Democratic way. Have the people who have it pay for the people who don't have it, so they don't have to do anything.
Don't encourage the people that don't have it to pull themselves up with their bootstraps.
Right. And so there was an article also that came out. They were talking about the Mandami effect and how, it's sponsored by U-Haul is he's the best, just like Newsom was for California.
Yeah.
Well, they're like
U-Haul salesman.
Yeah. Well, it's not happening yet. Well, I'm like, he just got in.
Well, he's not even in yet.
Right. He's just
elected.
Elected. Yeah. He's got till January.
Right. Like any election.
Yeah. So, and then a couple of companies have that weren't in New York before, real estate wise, are now in New York to help sell properties. Because they think there's going to be a big push out. There probably will be, but that's only if he can get things elected. I don't think he'll be able to get things elected.
Well, and price freeze all rents. Investors are going to go. Well,
they're already price freeze, dude.
Well,
they already have them,
but they're going to be double secret price freeze.
There's nothing. There are so many properties that are empty in those buildings because it doesn't make sense to fix them up because of the rent they get for them won't pay for the cost to fix them up. So they just take it off the market, and now you have 10 units in a building of 30 that aren't available.
Right,
and so they have to pay more for rent. But not too much more because they're on the rent control.
The rent control.
Yeah.
Worst thing in the world. Worst thing in the world.
It's bad.
Next to the other worst.
There's some worse things. There's some other worse things.
Well, I said next to the other worst things.
All right. So there was a study done in San Francisco, and they were looking at homes listed on the MLS and homes that did not list on the MLS.
Okay.
And how much do you think the difference in a dollar amount more than average for off-market properties, what they lost?
So probably 25%.
I know, but dollar amount.
Oh, well, it depends on the list price.
Well, on average,
let me just say 50,000.
Okay, well, times that by 6.
Okay.
So homes listed on the MLS sold for $302,000 more on average than off-market sales.
Right.
Sellers lost an estimated $750 million in potential equity over 3 years by going off-market.
Right.
Long story short, use an agent. You say the money you save by going off market, you don't save it because you lose it.
Right.
Don't step over $1 to pick up a dime.
Exactly.
And that's
or hundreds of thousands of dollars.
That's just the old
to pick up a nickel.
It's just the old saying. People focus on that, dime instead of focusing on the big picture.
I love it when you hear someone boasting in the supermarket. Yep, sold it off the market.
in one day.
In one day.
In 3 hours.
Wow. Wonder how much you left on the table.
A lot.
A lot.
So I guess HUD's not really has paused HECM endorsements.
What's a HECM endorsement?
That it would be a reverse mortgage.
Oh, okay.
And so that has increased the proprietary reverse mortgages. So there's a lot of companies who have an alternative to HUD reverse mortgage.
Okay.
They kind of went away for a couple of years when rates went up because they were just so expensive.
Right.
Now they're coming back, and that's how I could do over $1 million property before with a reverse mortgage.
Right.
There was a proprietary would mean a what we used to call the banks when they have their portfolio lending. How about that? Portfolio means proprietary.
Right.
Equals. Now, do you understand?
They're not selling the loan to where they're
keeping.
They're servicing.
Yeah. So if I say proprietary, you hear what do you hear?
Portfolio.
Thank you.
Yeah.
Just making sure we are on the same page.
I hear goose.
Anyway, so that's 40% in the September. 40% of all the reverse mortgages done in September were done by
proprietary lending.
Yes, correct.
Okay.
Yeah, and that's usually just the same company who's doing the reverse mortgage through HUD is doing it. They're handling that, the big companies.
Okay.
Yeah.
So meaning HUD's not picking them up.
No, well, they could, but if they're not endorsing them right now because they're shut down,
right,
then they're not endorsing them, and you can't get them done.
Got it. I'm
just surprised they haven't messed with FHA loans because I haven't. Well, I actually haven't done one in a long time.
Oh, so you don't know if they are or aren't?
Yeah, VA and conventional. That's all I've been doing.
Yeah, and the VAs are still going through.
Yeah, because that's not. It's not. It's they don't even need them.
Right.
For it. And on FHA, you don't really need them. You just endorse them at the end. You follow me? You send them off at the end.
I try to do that too.
Endorse them.
At the end.
Gotcha.
That's
all I had for today. So rates are doing better. Bottom line, rates are doing better. The market is probably going to go down. Oh, look, Dow's down 467. They're not happy today.
Oh, no. Oh, no.
That's because of the whole, what I just said, because of the unemployment stuff coming out.
Yep.
And if that tariff thing comes out the opposite way, it's going to be a great day for bonds and a horrible day for the market.
Yep.
And yeah, because we're going to have to give back all that money.
That's going to make us really bad. That's going to be a sad day if that happens.
Yes, extremely sad.
Someone needs to think about the United States.
They need to stop thinking about themselves and think about everybody.
Exactly.
That's the problem.
Do some common sense.
They just want to win at all costs.
Yeah, don't do that stinking thinking. Do the common sense thinking.
Yep, that's all I have.
Okay, bye.
All right, everybody, make it a great day. Thanks for being here. I hope we gave you some information. Did you have anything to talk about? Anything at all that you want to talk about?
Something to talk about tomorrow.
I'm not talking about about. Didn't you have something you said before that clients should be doing? Didn't you have an issue yesterday?
Oh yeah, but we talked about.
Did we talk that out on here, or did we talk about it on somewhere else?
We did both.
Okay.
Yeah.
All right. Make it a great day, and we'll talk to you tomorrow.
All righty, buddy.
All right. Bye.
Bye.